ChatGPT maker OpenAI flirting with a $100 billion valuation in its funding talks with investors. The company growing up, adding board members, experts as the AI landscape gets more competitive and draws more scrutiny from regulators. Joining us right now to talk about this and so many other issues, Geoff Lewis, founder of Bedrock Capital, is also an investor in OpenAI. Good morning to you. It's nice to see you. Hope you had a great summer. Curious just your reaction to sort of some of the big grand plans that we've been hearing that have been reported about in terms of what OpenAI and Sam are trying to do, potentially outside of OpenAI even, around some of the infrastructure issues in this space.
Certainly. Well, good to see you, Andrew. Thanks for having me. I mean, obviously, as an early investor here at Bedrock, we're very enthusiastic about what's been reported. I can't share too much on the specifics given we're under NDA, but it has been publicly reported that the lead of this prospective round is another early investor in the company, Thrive Capital, which is a firm we think very highly of, and the sort of infrastructure efforts we're very enthusiastic about. Ultimately, AI is going to need a tremendous amount of energy, going to need a tremendous amount of data center infrastructure, and we think there's a huge opportunity in the United States and with some of our allies. So very excited about how things are tracking there.
There's been a lot of speculation about ultimately whether OpenAI will have to go to public to provide liquidity and an exit opportunity for folks like yourself. But if it's to do that, it may have to change its structure, I would imagine, in some way, given that it is technically considered a not-for-profit.
Yeah, I imagine they're going to work that out. It might get worked out with this forthcoming financing round. It might get worked out down the line. You know, these companies in practice have been staying private much longer than historically. So something like SpaceX has been private for, at this point, 22, coming up 23 years. They have a quarterly tender offer process for early employees and investors where if you want to sell your shares, you can do that in the private markets. Stripe has been private for, I think north of 12, 13 years at this point. So in practice, you can get liquidity as an investor and employee in the private markets. I think they've really evolved and grown. And then ultimately, I imagine that OpenAI structure is going to continue to evolve. It's sort of a scenario where in order to really pursue the research, they had to create a commercially viable business, and they did that exceeding anyone's wildest expectations. So
Geoff, if in fact the company turns into a for-profit entity that ultimately goes public, what do you think someone like an Elon Musk or even some of the other early funders, I'm going to call them funders of the company or the not-for-profit were, at least under the guise that it was going to be a not-for-profit, should they get an equity stake in this thing? Should they get huge, should there be a massive payoff for them or not?
Well, I think several of them actually invested in the for-profit entity. So several of those early funders of the nonprofit then came back in and invested in the for-profit subsidiary. Elon was not one of those folks who did that. I think ultimately that'd be a question maybe for Elon's tax advisors on, does he want to get a stake based on this nonprofit donation? And, what does that mean? But I think that opens up a whole host of tax questions because there is still the nonprofit entity. I'm not an expert on that stuff at all, but yeah, I would check with his tax advisors and his lawyers.